Okay, so my name is Jesse Stamm. I am going to be doing the SRS call for you guys today. So that is Simple Retirement Solutions. We used to call it, I think we used to call it Advanced Markets. Some companies still call it Advanced Markets, and I think that freaked people out and they think advanced, like this is going to be an advanced thing. It's not advanced, guys. I know some people think it's super complex, but we're going to try to demystify IULs. A lot of times people think it's way more complex than it really is. How we'll run today is I'm going to kind of riff for about 10, maybe probably 10 minutes, 5, 10 minutes. I've got some gifts for you at the end. So I'll be dropping those in the chat. So little kind of things for you guys. And then we'll have a Q&A for most of this. So I'm just going to kind of run through some things. You can raise hands. I can try to get that. Or you can drop questions into the chat. I haven't given you guys all the mute hand yet because nobody's coming off mute while they're changing their kid or at the grocery store. But when that happens, I might have to kill everyone's sound. But until then, we'll come off mute if you have a question during Q&A time. So, like I said, my name's Jesse Stamm. I'll kind of kick it off with my experience with IULs, and then we can kind of go from there. So when I started in this, I started off with final expense. Anybody who can sell final expense can definitely sell IULs. If you can connect with a person, you can do this. So if you can drop a one in the chat if you feel like you're pretty good at IULs, but you've been doing it, you've done a bit. No one's going to say they're a god. Well, a couple of you will, but put in there if you're like, you're okay, you got it. Put a two in there if you're like, yeah, I'm totally freaked out by AULs. And a three if you're like, I don't think I could ever do it. Oh, got a lot of ones. I like a two. Okay, some twos. Okay, some people. Good. I'm glad we don't have any threes because don't ever think you can't do something. But good. We got a bunch of twos. Okay, good. Okay, some ones and some twos. Good. So when I started off, I didn't know what IUL was other than, like it's kind of a basic thing that you learn about. But I really wasn't sure what it was. When I started off, I did final expense for my first 4 to 5 months. If you've heard this, sorry, but I always repeat it because it's a good reminder for me. When I did IULs, when I first started off and I had 4 to 5 months where I just did final expense, it was rough. It was super rough. I didn't sell much. It was painful, is the lack of a better word. I was in the dial room from 8 a.m. Sheila Day, where are you, Sheila? Sheila will remember this. I was in the dial room. You were there like first day, Sheila. I was like brand new. And so I was in like lots of dial rooms. I was in, what is it? Bing Bong? Was it Bing Bong Dials is the room that we had? And I was in Nina and Hayden's room. And it was like, yeah, I'm muting y'all now. So we got to off mute her. But so just if you want to come off mute, let me know. But so basically it was rough. And I was in there from 8 a.m. till 9 or 10 p.m. Monday through Saturday. Sunday after church, I was in there till family dinner. I mean, it was like I lived in the doll room 70 hours a week, 80 hours a week. It was bad. And I was like not selling anything. It was like a final here, a final there. It was bad. I had a lot of pressure because Frank Euphemia is my upline, my recruiter. I've known him forever. And he was like, oh, you're going to kill it. And I was like, not killing it. Like, it was bad. I started to think about, should I become a cutter? Hopefully it doesn't trigger anybody. But that's kind of how I felt. Like, this is so bad. I have some issues here. And then I discovered IULs. When I discovered IULs, it was over a 2 week period, and I partnered with Dan Trinati. Some of you guys know him, and he kind of showed me IULs. This is what he showed me. He basically did his IUL presentation. I was like, oh, I transcribed the Zoom recording before ChatGPT, and I transcribed it myself. And then the next month, I sold $46,000. And I was like, okay, let's do that instead. Let's just do that. Let's just go to that side. So that was my experience with IULs. So IULs, the simplest way to explain it, since we have some twos, I'm glad we didn't get any threes that people think they can't do it because you guys can do IULs. What really is the simplest, it's permanent life insurance. It builds, cash value, that's tax free. Your clients can use that money for retirement, college, emergencies, whatever the case may be. just, use that. So if you guys are late to the party, one, if you're like, I got IULs, I'm pretty good at that, I'm okay. Two, if you're like, yeah, I'm a little, I don't know, I need some help. Three, if you're like, I'm so freaked out by them. Okay. Um, so basically, the core ideas you just need to know is that it's tied to the index, but not the market. There's no downside risk. There's upside potential, has living benefits and death benefit, which I like to call legacy protection. Okay. So for me, the reason it was a game changer is because I got to change the conversation that I was in. So instead of protecting people who didn't have any money, that had procrastinated their entire life to make a decision to protect their family, and now I'm trying to get them over the edge. Went to a conversation of partnership with people to help them accomplish what their actual goals were. So it was a totally different conversation for me. Some of the things I liked about the IULs was just not just the conversation, but it was higher persistency, higher premiums. So it was kind of a mind switch. I still needed to be engaged. I know some people when they get into IULs, they're, working 2, 3 hours, 4 hours. They just work when their appointments are, and they call for a little bit. They have 10 appointments for the week, and they close five of them, and they sell 10 grand, and it just all works out. I'm still like fully engaged, fully plugged in all the time because I still do vet leads, I still do other things, and I coach a team. So I'm still fully engaged, but um, I know that if I have my appointments that I'm booking for my IULs, if I have, 10, 15 appointments for IULs in the week, it could be a $20,000 week. If you have 10, 15 appointments and final expense for the week, it's going to be rough to get, I don't know, that pumpkin spice latte. It might not cut enough because you're going to have such a high no-show and you're going to have some persistency challenges. So you just need to do so much more. The higher premiums is, navigating that conversation, but you definitely are going to get higher premiums, better retention, lots of things, like that. So advice on IULs. If I had to give that advice, are you going to get a recording? The recording's posted each week. So if I had to give some IULs, answer with stories, get comfortable with sharing stories with people. Um, just like I shared a story with you at the beginning about what my experience was, I didn't say right out of the gate, oh, IULs are this. I shared it kind of like this is why to do IULs based on a personal story. You want to have those stories the same way with what the IUL does. So instead of just going through and saying, like when someone says, well, what is the IUL? Well, an IUL is a financial vehicle that helps you create wealth through the blah, blah, blah. You maybe don't want to do that. Maybe instead, you're going to say, so basically, what IUL does is it lets you put your money into a place where it can never lose anything from principal, even if the market drops. It goes up and builds with interest tax free, and it's something that you can use in the future. It protects you while you're living, and it'll help you leave a legacy. Does that make sense? The person to that is going to say, oh, yeah, that makes total sense. I didn't really say anything monumental about the technicalities of how an IUL works, right? I just kind of gave that information. Or at that point, once they say what they're interested in, connect it to a story or connect it to a narrative versus kind of the nuts and bolts of it. The biggest thing you want to focus on is keeping it simple and not wowing them with all the things you know. Now, when you're new, that might be great because you might not know a lot about it. So that's perfect. I find that sometimes people sell more when they're kind of new because they're not over explaining things. So, so that's kind of like the basics, the overview of you know kind of how I got into it, how I have a conversation with people. I want to just kind of quickly jump into Q&A with you guys so you can ask any questions you have. I don't know everything, but I've been around a little bit, been able to, been blessed to hit Hall of Fame um, two times, three, basically every year since I've been here. I don't even know how long I've been here now. I think it's two, but I just hit like 4 minutes ago for this year. So yay. Um, so yeah, every year. But the only reason is because of IULs. It's not like I'm like some magical person. It's IULs. IULs are what it is. Because I don't know how much I'd be doing if I was just focused on final expense and also annuities. Annuities as well. So I'm gonna look at some of the the chat in here, you guys, let's see. Investing component and builds money over time with a question mark. Daniel had that, but I don't know what the question mark is. Were you just kind of saying that? Um, let's see. You guys, put your hand up if you have a question, or drop it in the chat like a clear question, because I don't understand that as a question. Okay, I'm looking here, guys. So let's unmute Athen. Athen, let's see. You can unmute. I just remuted
Hey,
you.
Jesse. Hey,
Yeah, man.
thanks. Hey, man. Great topic. And I guess just for some of the newer people, myself included, what does your process look like? Because we don't want to get into explaining everything, right? We want to be asking questions, kind of reaffirming their position, what they're looking for. So, like, do you do a discovery? I guess maybe just in 30 seconds or less, what does it look like for you? Are you using props? Are you using examples of data with graphs? How does it
Yeah,
look?
great question. So the way I do it is my intro to it, I'll throw my general script outline in the chat right now. This is my general script, okay? I say general script because I don't follow it exactly. My team members don't necessarily follow it exactly. It is super rudimentary and it's a basic structure. The reason is because all the conversations can go different. It's when if a person says to you, "Oh, I've done a lot of research on IULs. I saw your ad. I watched the video, and then I took the little course that was after the video, and then I've been researching this for 2 years now." That's a very different conversation than a person who's like, "Yeah, I want to be my own bank. I'm 58 years old. I think I can probably do like $100." These are very different conversations. So there's not one script for that. So that's just in the chat a script. So my general process is, "Hi, how are you? I'm calling about the IUL. You submitted this request. Thanks so much. What we'll do is I want to tell you a little bit about me just so you know who you're speaking to. But what I really want to do is find out a lot about you, what you're looking for, how we can help you out. I'm a broker. I work with a bunch of different companies, so I'll kind of explain how that works too. Does all that make sense?" They say yes. Great. So about me, I'm a broker. I work with many different companies. I specialize in the IUL Indexed Universal Life and all types of cash value life insurance, including infinite banking, many, many things to help people build financial success for their future. So that's what we'll spend our time talking about. Now, let me ask you, when you filled this out, what grabbed your interest? Why did you take the time to fill out the form and put your information in there and do all that? What kind of was a flag for you that said, "Hey, I'm interested in this"? And they're going to say, "Oh, well, I was just wanted to learn more." They're going to say some sort of surface answer. And then I'm going to dig deeper. And now it's just conversation. I'm just trying to find out what the deal is. What are they actually looking for? Where are we going? Because I'm trying in my mind to slot where we are, what our conversation is. Is it a person who saw IUL, but they really just care about leaving money to their kids or just paying for their funeral? Or like the chiropractor I just got started who is putting $3,000 a month into his IUL and he wants to have the business pay for it, but he was thinking he should do key man insurance, but he's probably not going to do key man, because that doesn't quite make sense for what we're doing. That's a very different conversation. So I just got to figure out where we're actually going to then decide how much I'm going to do. Now, on that guy, we got into the nitty gritty and he had already met with two other agents and they were very surface. They only like knew the high level stuff. So he wanted to go nitty gritty because he'd been looking at this for a while and just hadn't found the right agent to get it with. That is very rare. It's normally surface stuff. You got to dig a little deeper and people have a couple $100. You just got to find, what the conversation is. Does that answer your question? Okay, cool.
Yeah, for
Um,
sure. Yep.
Okay. So if you have someone on the phone or driving, do you show numbers? If you have someone on the phone while they're driving, do I show numbers? Absolutely never, because I don't want them to crash and die. Because then how are they going to buy life insurance? No. But ultimately, no, I don't. If I hear them driving, and even if I have an appointment, if it's a reset appointment, I'm not doing the appointment if they're in the car at a certain point. Let me explain. if I'm talking to a person who I know is like a Uber driver, I don't know, I'm just making that up, but they drive for a living, they drive all the time, and I don't know if I'm going to be able to get them, I might have a little conversation. If I discover that they're a death benefit focused, possible where I'm going to go to a one call close with them, then I might just do it because I'm gonna just like get this thing done because it's gonna be $100 Americo or $100 Moo death benefit focus. I might just, do that. But I'm gonna play that by ear a little bit. In general, if there's any deep conversation or there's a potential that this could be bigger, I'm not gonna go too far in my script. I'm gonna rebook the appointment for when they can be in front of their computer, and then I'll tell them I'll just basically do a discovery call. You guys understand if you don't know what a discovery call is, put a thumbs down or a five or something in the chat just so I can see it flutter. If you're like, what's a discovery call? Okay, so a discover enough. Okay, so a discovery call is basically where you're just having a conversation to set the appointment. I used to do discovery calls exclusively. So every single person I would call, I would do a discovery call. I'd be like, hey, Sean, this is Jesse, blah, 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 IUL, all the things, conversation, find out what you're looking for. Are you healthy? Yada, yada. Okay, let's book a Zoom. Then we get on the Zoom, and the person tells me that they have $100 that they want to put towards this, and can they split that between them and their three kids? Why did I make a second appointment and a Zoom? That was a conversation we could have had during that call. Like, we're not doing a Zoom for that. So I always do what I call in the script calls a bifurcated path. That's just a pretty word for split. Two options. So option A is we're going to one call close. Option B is we're not going to one call close. We're going to do more of a discovery. I'm not going to get into the nitty gritty, and I'm going to do a presentation on Zoom. The way to know that is kind of with a decision tree. This is gift number two. Okay. So in the chat is the decision tree that I use for myself and my team to kind of just get my head around it. So if the person is going to be $100 to $300, I'm going to try to one call close it. Because don't you sell people all day long with final expense that are spending $200 to $300 and vets that are spending $400 on a $40,000 Americo? Do you set appointments for them if they're on the phone and buy? No. So why would you do it with an IUL? Now, when a person's putting more than 300, some teams like to look at it as 500. You just pick whatever your number is, your threshold. When someone's going to put 500 bucks and they're 32 years old and they want to use this for retirement, I need to make it make sense. I need us to have a conversation about how we're going to use this. It's an effective tool. So I'm probably going to set a follow-up Zoom. Unless they're ready to go, then we're going to close it. But if they're like, well, okay, so how does this work? I'm going to feel the conversation out, and I'm probably setting up a follow-up Zoom with them so we can go over an illustration and I can explain how things work because I want them really engaged in this, and then really committed to it because it's a chunk of money. But when it's a no-brainer amount of money, and what I mean by that is the amount they'd probably spend for final expense anyway, or the amount they'd spend for insurance, 150 bucks. I mean, I don't know about you, but is anybody's car insurance more than 150 bucks? Right. Did you make a follow-up appointment with State Farm? No, you just like got it because you needed the insurance. Like your health insurance is probably more than that too. So I'm not going to make a follow-up appointment for someone to buy $100 to $200 thing, maybe 300. Does that make sense? Let me go back to the other questions. More a warm market. So warm market, you may say something like, um, yeah, Adrian, thanks for asking about what I'm doing. So I'm working with people to help them build their financial future, and I do that through cash value life insurance. It's kind of one of the things that so many people have forgotten out there, but it was around for like 100, 200 years, and everybody knew it was the greatest place and the safest place. So it's basically a place where you can put your money that's totally safe, has zero risk of loss. You can get the upside of the market, and that upside is linked to the market and is tax free, and then ultimately, it protects you while you're living, gives you access to tax-free money while you're living, and leaves a legacy for when you pass. Do you think something like that would be interesting to learn a bit more about? And they're going to say yes, or they're going to say, no, that's stupid. I don't care. And then I'm going to buy some leads. So for warm market, that's how I would handle it. Just that little bit of conversation with them. Um, a newer person here, yeah, that was that one. Let's see what else we got. IUL leads from Agent CRM or another vendor. I use Agent CRM. I get uh, new leads, I get old leads, I get all the leads. So I buy all kinds of leads from Agent CRM. Yes. I do buy some from ILC, but I like Agent CRM, IUL leads the most. They also have trucker leads. I just put the link that you can buy leads from there. So, but yeah, no, I like Agent CRM the most right now for kind of like mass leads. Um, Let me see what other questions we got in there. Do I specifically buy IUL leads or more mortgage protection? I only buy IUL leads or vet leads. I don't buy any mortgage protection leads. Like that's a conversation that like Jana or Rami or many other people could have because they're rock stars with mortgage. It's a different vibe. For me, I think it's just a mental thing. I can say when maybe Jana and I need to like she's down in Florida, we should like hang out and she can teach me how to do mortgage because it's just not where my brain goes for some reason. It's a different framing than the IUL. I like the IUL conversation because when they come in from an IUL lead, they're framed around that. Yeah, Dean's in the chat. That's all he does, and he sells, 24 gajillion dollars in annuities from it as well. I think it's a great place. It's different than an IUL lead. IUL lead, they saw something about IULs. They come in with a little understanding. So I like that intro to it versus something that's not, and then it's fine. You just sell them probably an IUL for mortgage protection sometimes or other things. It's just a different conversation. I'm kind of a um, creature of habit. So I like doing kind of the same thing over and over again versus being all over the place. So that's why I've stuck there personally. Let me do a couple other questions in here and then, okay. So it says when you have someone on the phone, oh, you already did that one. What carriers do I use for IUL? So it depends. Look at the decision tree, it'll depend. So there's instant decision and then there's structured. Instant decision, Americo is really good. I like Americo for my lower dollar cash focused or max cash structured. So when they're like $100, $200, I'll Americo. You've now got the new NLG instant decision. So that's a great product too for that, the Rapid for NLG. Now, if you are doing death benefit, I'll use the NLG or Mutual for death benefit. I don't use the Americo for death benefit focused because mathematically it looks like it could have some lapse issues because if you do a 40-year-old and it says guaranteed not to lapse for 20 years, if they're healthy enough to get an IUL at 40 years old, statistically, I don't think they're dying at 60. Well, that's when it says it's guaranteed to not lapse. So that I don't like that thing. So I will use for death benefit focused mutual or NLG, not Americo for someone who's a little bit, maybe a little bit younger. And then for structured, I'm an NLG first, F and G second kind of guy. Hopefully that answers that. Can you put a lump sum into an IUL or is it monthly payment? You can do both, but this is critical. So critical. If you don't know how to do it right, you might want to phone a friend. So if you take $50,000 and throw it into the front of an IUL and then have a $200 a month payment, you are totally effing your client. Like totally, just mathematically, because the amount of insurance that it's required when you put 50,000 in the front of an IUL will cause the amount of insurance to be really high, and then they go down to that $200 payment monthly, and then the amount of insurance, the $200 isn't quite cutting. Now, if they're, I don't know, it depends on their age, but if they're 55 years old and you're doing that, you're probably screwing them. The way to know is so simple. You're going to call sales support for the company, or you're going to call the SRS team, or you're going to put in a request on the SRS page where they literally partner up. So you have someone like myself or one of many other people who will tag team with you and will show you how to do it right. But you can call NLG and they'll just tell you how to use the calculator. It's not quantum physics. You just call them up and they tell you and they walk you through it. And they'll say, yes, if you put 50,000, it's going to give you 800,000 in insurance and they're $2,400 a month, it's going to lapse in 40 years. But if you split your 50,000 over 4 years and do 12,500 each year, it brings down their cost of insurance so much they're actually going to make tons of money. Oh, so I should do that. Smaller commission, not screwing client, better relationship. What would you do for your mom or your dad or your cousin? So that's what I would do. How do you know that? Just know huge amounts of money up front, small monthly, probably not going to mathematically work out. You might be looking at an annuity and an IUL. So annuity for the money we've already built, IUL for the money that we're going to build. Or you need to break it up. If you're not sure, phone a friend. Ask somebody who knows, use the SRS team. You know, it's worth doing a split to learn how to do it versus trying to figure it out on your own. And if you want to figure it out on your own, you can call the sales support at any of these companies. They'll help you out. Main target for IULs for middle income families, high income families, self-employed. So I don't know, Wyatt, can you reframe that? Maybe unmute you or put your hand up. Where's Wyatt? Oh, there's Wyatt.
So basically, what I was trying to say, if someone doesn't make a lot of money, like a salary wise, would you still kind of like recommend that? Or was someone like kind of like in the middle of like 50, 60,000? Would you still kind of, if that makes sense?
Yeah, so I base it usually off of budget and I base it off of income. So the conversation I have with someone, I'll just do it for you right now. This is exactly what I say. Blah blah, all the things about health and criminality and DUIs and all the stuff. And then I get to the end part. I've done the golden question. I get to
Mm,
the money part and I say, okay, so Wyatt, what we need to discuss now is how we're going to structure this and how we're going to build this for you. Now, most people, when they're building for retirement, and that's what you said was super important to you, wanted to have money for the future, have money that you could have when that, when you need it in the future, maybe it's for a business, but then also in retirement and have that all tax free. You want to be saving about 10% of your income for your entire working career. So what does that mean? From like 19 to 20 years of age until you retire, most people to retire at 60, 65, 70. So that's a long time putting in 10% of your income of everything you have into a high yield compound interest account. Now, I don't know about you, but most people I know have not done that. So then the next question is, how close can we get so we can make up some time and build as much as we can? Remember, with savings, more is always better, but it's got to be the right amount for you. So, Wyatt, how much are you making on a monthly basis? Wyatt says $3,000. I say, great. So $3,000 a month, 10% of that would be $300 a month. Now, the question for you, Wyatt, is would that be comfortable for you, or would you want to do more to make up for lost time, or would you need to do less right now because you've got other things going on? What's the right number for you? Stop speaking. Wait for the answer. It might get awkwardly long, but they will eventually speak. And they
okay.
might say something like, now that's a red flag because like they don't know what their money is. Okay. So that's okay. We just have to have that conversation. Or they're going to go, no, I could definitely do 300. That is also a red flag. A person who makes $3,000 a month has just $300. Now, when I find out why it lives at home, we good again. If I find out why it's got, or if I already know that why it has a wife and three children, I'm confused. What? Like, I don't understand. So how if he's got, but he might. So I just got to have the conversation, understand. If he lives in like some rando place, well, then maybe he's got plenty of money. Maybe his wife makes a ton. I don't know the situation, but I just got to be mindful of that money and say, okay, so and we have that conversation. Now, I'm just going to say that that's the 10% is what people on average want to save for their future. Okay. I'll do a couple more questions. Boo, boo, boo. Let's see what else we got. When do you use Moo America? I think I answered that. The decision trees kind of helps with that. Let's see what else we got. Can you go over the application process? I can't go over the whole app because that's a whole thing. Each company's different, but I'll give you the explanation of when do you do level or when do you do increasing. But I'm going to do it with another gift. It's like freaking Christmas, isn't it? Um, Burp, 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 burp. Okay. So this is a training that Dan Trinati did a while back. This is, I would say, the um the end all be all training that explains level, increasing, structure as it pertains to NLG, how you want to think about it. It's just like a really good um, base of like how to do this thing. So I would watch that video multiple times. It was going to give you all the details about level or increasing. But here's the deal. The conversation I have with people all the time is, so Haley, now when you're putting this money and you said 200 would be comfortable for you, are you the type of person who you think you want to put the 200 in and set it and forget it and you're never going to want to save more that's in long-term savings? Or do you think you're the type of person that you'd put the 200, but when you have extra money, you'll put that in and if you maybe get a tax return, you might want to put a chunk of money in, knowing that it's going to build a lot more compound interest for you and give you a little bit more legacy protection now for your three children. So is it kind of set it, forget it, not put any more money, not save any more, don't need to have a bigger legacy protection for the kids, or want to put extra money in, want to save more over time, want to make sure my kids are okay if God forbid something happens now? Which do you think you are more of? If they say, set it and forget it, I'm good, I've got my other 12 policies, then it's increasing. If they say, oh no, I definitely want to be able to save more in the future and more legacy protection is good for now, then you would do level. That's kind of the easy way to think of it. There's some nuances there, so watch that video, but that's kind of the gist of it. When can a client take a loan on their policy? So there is no fee to take the loan other than the interest you pay on it, but it's not like a flat fee or something. When you take the loan, this is super important to have good conversations in the beginning because what you're going to find out is that sometimes people are going to call you after 3 months and want to take a loan. That's either because they didn't understand or you didn't explain it fully, but the rule of thumb on this is you don't want to think about touching it for 3 to 5 years. You don't want to think about touching it for 3 to 5 years unless you hyper funded or max funded the policy. What does that mean? That means you had a level policy, your payment was 200 a month, and you were putting in an extra $100 to $200 most months, and that at the end of the year, you saw what the MEC limit was, and you're like, oh, I've got 500 left, and you put it in. If you do that kind of stuff, cool, awesome. You probably have more money in 3 to 5 years. But if you've just put the minimum in for 3 to 5 years, you probably shouldn't touch it. Can you if you have an emergency and you're not going to be able to like pay the mortgage? Yes. But what was their goal for this? To save up money for retirement. So would they be taking it from their 401k? Maybe, maybe not. But if that's the dire situation, it's there. But let's save it for the future. Okay. Okay, I need to think about it. So that's just a normal rebuttal. You want to get comfortable answering for everything. So I know, Blake, you said I want to think about it. What are the rebuttals? This is the same for everything. It's not an IUL rebuttal. I will just tell you this with IULs. You don't want to push too hard because it's a little different than it's $100 payment to make sure my kids don't have to pay to bury me. That has a little different energy, a different pain associated to it. This is put money into something that I'll have for the future. And I haven't saved at all, and I'm not saving, but now I'm going to save. So it's a different vibe to it. So here's what I ask people when they say to me, I have to, or I need to think about it. I say, totally understand, makes a lot of sense. Let me know what you're thinking about, like what you need to think about, so I can make sure I provide you with the right information so you actually have something to specifically think about. And then I stop talking. And then they say something like, well, it's just that I don't get paid till Friday. And so I just wanted to, maybe start it then. Okay, well, that's awesome because it's Wednesday. And the cool thing about this, it's going to take a couple days probably to get approved. So just to be sure, if you got instantly approved, I can make it start on Friday if that's cool for you. Oh, sure, that's great. I'm glad I said that. I'm glad I had a rebuttal. Or they're going to say, well, I really want my wife to take a look at this. Crap. Let me put that note down to myself, make sure I clarify that in the beginning of the conversation. Good learning for Jesse. Or they're going to say, well, I wasn't really sure how it worked with the S&P, so I wanted to check because I know I have money in my high yield savings account and it gets, my guy said it gets blah, they're all over the place. Okay, have a confused person. I'm confused by it. So we need to go back to the basics of the conversation. I don't know what they need to think about, but here's what they aren't going to do. Think about it. So we already know they're not going to think about anything. So I need to make sure I answer what their actual question is. So I got to ask. That's how it answered that. Once the discovery call is complete, how long is a typical IDO application? So an application, like with if it's a full application, it's going to take, 20 minutes, 10 to 20 minutes, to knock out an application. It should be pretty simple. Um, how much you spend on leads. I always look at leads as a basic equation. You're going to look for a 5 to 10x. So that means you're going to spend 10 to 20% of your revenue goal and revenue in general is going to be on leads. So that would mean if you spend 1,000, your goal should be to hit at least 5,000 to feel like, okay, that was cool. 5x, 10 is the goal. So if I spend 1,000, I want to make 10,000. Okay. But it's a 5 to 10x. So when you're new, it's going to be closer to a 5. When you're more seasoned, you should be getting closer to a 10. Okay. So that's just the way to think about it. But think of it this way. If you got a 3x, that was your first week or two of learning, that would be fun. That'd be great. But you want to be in the 5 to 10x place. How do you set up a UL for Insure to use their own bank hyperfunding? I think I kind of covered that. Hopefully, if not, can you raise your hand? Um, and then let's say someone's over 300, you're sticking strictly to showing death benefit cash. Is there anything? Or are you looks for anything else? Um, no, Jamie, I think your question, if someone is over 300 a month, are you sticking strictly to showing death and cash? No, I'm going over the three benefits. So that's going to be tax-free cash value accumulation, living benefits, legacy protection for their family. So I'm always going over those three no matter what they're doing. It's just where I'm going to focus the conversation. Because if a person is death benefit focused, I'm not going to talk about all the money they're going to pull out. Guys, one of the biggest disservices we do to people is we tell someone we have this huge conversation about be your own bank, use money for retirement, you know, have, stacks and bands left and right, and then we sell them a $100 death benefit focused America policy. You're just straight up lying to people. Like, I'm just going to be real direct. You're literally just lying. Like, if you get $100 America policy at 40 years old and you tell the person that they're going to be able to be their own bank and use this money in retirement, you should also be telling them, and your policy is going to lapse a few years later if you take all the money out of it. That you should be telling them that if that's what you're saying, because that's how it's structured. It's not structured to be able to pull a ton of cash out on a death benefit focused America IUL that is only guaranteed for 20 years. Like, that's not what it does. So you just got to be careful how you explain the IUL. So I just want to make sure I'm above reproach so that I never am in a situation later where I feel like, oh, that was really bad. I kind of, that was not good. I don't want to ever be feeling, dirty like that. The other thing is I don't want someone come behind me and reselling my IUL. I've had it multiple times. Agents have tried to sell someone an IUL, and thankfully I've had clients who called me up, and I've had one guy I remember vividly, he was super angry with me because the agent told him all these things that he could get such a bigger death benefit, so much more, and still have the same cash value. Thank goodness I could show him both illustrations and be like, nope, not the one who lied to you. So he kept his policy and that was good, but you just need to know a little bit about it. But watch that Dan video. It's going to help you out a lot and just, learn what you can. Okay. Boop, 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 boop. What else we got on here? Are you dialing or having a conversation? Are they booking? So I do one call closed dials and I do booked conversations. Okay. So Fabrice, you can unmute. What's your question, bud?
Hello, sir.
Yes.
Hey, sir. Nice to meet you. It's so funny because I was at the Ignite conference in West Palm, and I was just thinking about annuities. I used to sell IULs back in the day, but now I'm just focused on fixed expense or final expenses. I literally just got off a call with the vet, and he told me I was trying to just run through my pitch, and he just like, yo, honestly, brother, I don't need any life insurance. I have $300,000 in cash, and he says I'm 89 years old in a situation like that. How would I be able to help a client or prospect?
Well, not with an IUL. So, but that is a possibility for an annuity.
Hmm.
Um, at 89, I don't know. I don't know what's going to happen in that for an annuity
There's
for.
no options for 89, Jesse. That's
Okay.
already outliving it.
Okay, I was gonna say,
Okay.
I was like, I don't think I'm looking through my head. I'm about to call on Dean or David because yeah, that's not 89-year-old Hail Marys is not my strong suit. So
Right.
nor apparently is it anyone else's. So that's what it is. But what it does sound like is he probably has kids, right? And he
Yeah.
300 grand. He's probably not saving that money up that he needs to live off of it now because he's 89 and he's
Hmm.
probably wants to make sure it's protected and not in the stock market or just sitting in a shoebox. So it
Hmm.
sounds like for his kids who are in their, if he's 89, they're in their 60s.
60s. Yeah.
Yeah, it sounds like he needs three annuities for each one of the kids at 100 grand each to set them up for their future. I'd love to
Hmm.
help you with that.
Hmm.
Or he needs to get IULs that he builds for all of his 13 grandkids. So there's still
Right.
lots of things he can do to pass on a legacy with that money. It isn't turn it into something and make some tons of cash at 89.
Oh,
So
okay.
yeah, so always be
Plus,
thinking,
somebody at 89, Jesse, it's really high risk. I mean, you're really risking the client's insurability because if something happens the next day, it's too late with anything.
yeah, yeah, that's
Right.
why I would say it's the kids and the grandkids and passing a legacy, not through insurance, but through put that money something for them, especially if it's in a bucket of cash. Um,
Right.
Right.
yeah, so I mean, and think of it, it's on one hand, it's thinking of the other opportunities. It's the socks with the shoes. It's the laces, the white stuff that goes in the bottom of the treads or the side of the treads, and it's the cleaner package, and it's all the stuff that they're selling you when you're buying a pair of shoes that they should be selling you that they never sell you. But we all know that that is where all the profit is. It's the stuff you add on and think about. And so
Hmm.
with this, you can't get a sale necessarily, but you can have opportunity there for all these other things. So I would just look at those types of clients as like, how can I help you do what you actually want to do, which is pass on a legacy? Maybe. I don't know.
Okay.
Like you got to find out. Maybe, I mean, if his goal is that, then you got him all over the place.
Right. Right. That makes sense. Well, thank you so much for that wisdom. I greatly appreciate it. I'm gonna
My,
try my best to keep on tuning in onto the Zooms every Thursday.
yeah, man, you should. It's good stuff. Okay. Who has the best illustration for learning, teaching new agents? Well, it depends on what you're selling. So Moo, I don't know. There's that meme, that TikTok, run. Dun-dun-dun-dun. Okay, so I would say don't spend a lot of time in WinFlex land. It's not where I like to spend my time. Marico has a really simple illustration. If you're doing max cash for a $100 person, that's like an easy one to look at. Like just look at it, super easy. NLG, not hard. I find it's easier than some, but if you're not sure how to do it, they do classes on it. So just go to the training section on their website and they have classes where they show you how to do illustrations. You can call the sales support team and they'll do it for you. Or if you're like, I'm so confused, just go on the SRS page. And when you have a deal like that, connect with someone like myself or another IUL specialist and we'll help you out. We'll structure it. We'll take care of the whole thing. You do a split, but then half of something's better than all of nothing. So that's a really good way to learn. I did my first couple deals with a full-on split where, just made sure I was doing it right and I was able to phone a friend. We'll just because we'll do a couple more questions. If anybody has questions, pop your hand up. I'm just kind of going through the chat. I think I got everything in there. Any other hands up? Oh, another one popped in. Are all IUL indexes at a 1-to-1 ratio, or is there participation rate in caps like an annuity? It's similar to an annuity. Yeah, they do have participation. Some have caps, some they all have a ratio. So whatever the ratio is, just remember that all IUL ratios, there's a participation number linked to it. So the participation is not necessarily what the participation will be in the future, just like with an FIA. So it's not a fixed rate or a fixed participation. You actually, that actually matters. So where that really comes into play is you want to be with a company that you feel like you can trust. So I'm a National Life guy, and the main reason for that is I love F&G, I love Larry, I love the Peeps. It's great. And I think it's a fine product. And if you love F&G more, I love that for you. I personally love the 177-year track record of NLG. I love that they're a mutual company, so they're not answering to shareholders. And that's kind of part of my pitch. You want to be with a company that's looking out for their clients most. So that's kind of my vibe with that. Um, so you want them to, them to get paid. Also on the NLG product, I focus on the S&P cap focus right now versus any of the others more specialized indexes. Okay. Kensley says, I have some to 300K in cash. I have a wife, a daughter, 8 month old, vested. Which route scenario? It depends on their age. It depends on what they're trying to do. It depends if they have other life insurance. That to me, if you have 300,000 cash, that's probably yeah, like Dean said, probably a fixed index annuity. Unless they don't have any life insurance, then maybe it's an IUL, possibly. But no 30, no insurance. Yeah, it's probably still an annuity, or it's like 200,000 in an annuity, some coverage for their kids and the wife, and and then maybe I'd want to know some more details there. But it's probably an FIA, and it depends on when that they need the money. If this is just for retirement for their future, then it could definitely be an FIA. I love an IUL combo, but you would not drop that 300 in the front of an IUL unless they were paying, 10,000 a month. Okay, so again, if a person's doing a little bit, then yeah. Bop, bop, bop. What else? I have a client who is Lear America due to reviews online. So to use NLG. Or Moo. Depends what you're trying to do. Okay, guys, any other questions about anything IUL related? There's there questions about past investment. Is there a criteria for yes, there's always a criteria for improvement. With NLG, did IUL and ask about past investments? I don't know that question. I don't know. It could have been a weird state thing. I don't know. Here in some, I don't know. Oh, New York. Well, that's that's New York. So yeah, New York has interesting questions on that. Yeah, just answer them to the best of your knowledge. They just want to basically know that you're not taking advantage of the client by wrangling them into some sort of product. But you just answer to the best of your knowledge. Anything else, guys? Okay. Well, thank you so much. It was great seeing so many faces and so many questions. Hope you guys have a great rest of your day. Happy selling. Let's crush it. Take care, guys.